Whether it's beef cattle or dairy cattle, all cattle need water. Ritchie brings you fresh water on demand. Ritchie, proud to be a partner to the American cattlemen since 1921.
Hello, I'm Lance Zimmerman with the CattleFax Closing Bell, brought to you by Ritchie Watering Systems. The year-over-year increase in 2015 total protein supplies was one factor that derailed U.S. cattle and beef markets last year. Cattle prices became too high relative to underlying pork and poultry values, and the market declined 30% from spring to winter. Reviewing the underlying cattle-to-hog price relationship provides perspective on today's underlying market sentiment. Last week, the ratio between the USDA 5-area dress steer price compared to the CME lean hog index was at 3.2. It's nearly 30% lower than the all-time high set exactly 1 year ago at 4.5. The deferred live cattle and lean hog futures markets imply a ratio back to 1.7 by fall. The ratio is a reflection of the relative supply and demand fundamentals for both beef and pork. The lower 2015 ratio and futures implied reductions in 2016 suggest growing beef supplies relative to pork, declining beef demand relative to pork, or some of both. Focusing on supplies, the weekly beef to pork production ratio has been between 0.8 and 1.7 for the last 15 years, but more recently it has spent time at the lower end of the range. Over the last 18 months, it has been less than 1 for 66 weeks. In the 15 years prior to 2015, the ratio was less than 1 only 29 weeks. Typically, a smaller ratio is supportive to beef prices relative to pork. Starting in second half 2016, CattleFax expects year-over-year beef production to increase relative to pork, but the ratio will likely average close to 1 during that time. Supplies suggest a slight, but likely not extreme reduction in the beef to pork price ratio. Demand paints a similar picture. Weekly wholesale pork demand is up around 10% year-to-date, while beef demand is up 3%. Again, the demand shift appears to be negative to the ratio, but not as extreme as futures prices might suggest into second half 2016. The fundamental data is telling a different story than the futures market is pricing today. Demand is usually the more difficult factor for markets to predict. So, is demand for beef going to decline relative to pork in 2016? Is futures underestimating the robustness of current beef demand? It's too early for those answers, and it likely means that the cash cattle and beef markets will have to provide the futures market with more direction in the summer. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.